All right. Good evening and welcome to yet another live class on Crypto Based Media TV. It's indeed a pleasure to have you guys here and a privilege to be amongst you guys. So, give good evening to us all and welcome to the live class. So, if you have joined the live class, you can quickly drop your name and where you are watching us from in the comment section. Good evening, welcome to the live class. Good evening and welcome to the live class one more time. I, as some of us know, my name is Isaac Jonathan, and I'm popularly known as Crypted Joe. Is the teacher student, as some will say, or some will call me. So my name is Isaac Jonathan or Crypted Joe, whichever one. So for this evening, I'll be your host. I'm the one hosting this live class, so we'll be learning and teaching ourselves on some vital things about market structure and support and resistance. How you can identify, make use of it in your trading to make use of it efficiently. So if you are live with us, you can tell us your name and where you're watching us from in the comment section. Okay. Good evening. Good evening and welcome. I Good evening to you too. Welcome to the live class. Anyone else? Your name and where you're watching us from in the comment section. Quickly drop your name and where you're watching us from. Okay, Mr. Emmanuel from Lagos, you're welcome. Mr. Paul, you are welcome. It seems some of you have been here before. If you are watching us for the first time, you're welcome to the live class on Crypto Base Media TV. And been if you have been watching us before, you are welcome back. Welcome. It's a pleasure to have you back. Okay. Mr. Andrew from Asaba, you're very welcome. Mr. Joshua Paul from Port Harcourt City, very welcome. You're very welcome. It's a pleasure to have you guys here and a privilege to be amongst you. Welcome. So, um, in this particular class, we are going to be talking about um, mastering market structure with support and resistance. You know, market structure is lets you know the current behavior of the market, if it is ranging or a trendy market. A trend market comprises of uptrend and downtrend. So once you have the knowledge of market structure, you'll be able to identify and know the particular trend that a particular pair or coin or currency is currently in. So once you have the market structure knowledge and you merge it with whatever strategy you are using, say breakout, support resistance, SMC, what have you, it will be very easy for you to identify and identify trends, make decisions with it, and then take trades. Then most of the time you be on the profitable side of it. So that's just it. Welcome, Mr. Miracle Gochuku. Welcome, Mr. Adewale Omotala. It's a pleasure to have you guys here. So quickly, I'll just say one or two on support and resistance before we before we go into the main business. So I put some things down before the class started. So support and resistance is just basically key levels. And once you hear support and resistance, anybody telling you that okay, support and resistance strategy is all about key levels, he's trying to tell you that yes, key levels is also another name for support and resistance. So a key level that current like is below the current price of the market. That price do comes to maybe once or twice before going up again. We call that key level a support, and a key level that is a bit above the above price. Um, the market has come to like more than two times, and it keeps coming down from that zone. We call it um, a resistance zone. So before we start fully, can you all see my screen and am I audible enough? So we can start fully in the to the class. So if you can see my screen clearly and you can hear me audibly, just indicate in the comment section so that I will know that we are all following and we are all together. So quickly, if you can see my screen and you can hear me audibly, indicate in the comment section so we can get right into the main reason why we are here without wasting much time. So if you can see my screen and I'm audible enough, can hear me clearly, indicate in the comment section so we can start quickly. We don't want to waste too much time. At least when you spend little amount of time, much is being said is better than wasting time and saying little to nothing at all. So if you can see me, sorry, if you can see my screen and can hear me audibly, just indicate in the comment section. So because I'll be sharing my screen as I'm explaining some of these things. Okay, I will assume we are all seeing the screen. So let me just okay, no problem. Okay, so I put some things down before in the live class. Over time, a support floor tends to get broken, and then it will not change the nature of it. Once a support zone is being broken, it turns to a resistance zone, and vice versa also. When a resistance zone is being broken, it could turn to a support. So when a support zone is broken, it could turn to a resistance zone. It could turn means probably it might still continue to be a support zone, and it could turn to a resistance because everything we're doing in this industry is probability based, just based on probability. We don't own the market, so we're actually following what it's saying at a particular time. So once a support zone is broken, it could turn to a resistance zone, and when a resistance zone is broken, it could turn to a support floor. So I'll just show you um, some examples before I will show you how to draw support and resistance in a ranging market, trending market, and confirmations to use before entering. Because you don't just draw them and then enter. You use confirmations so that you don't get haunted at your stop losses. So for this particular example, I have BTC USDT on the 1 day time frame. Yes, and I'll just scroll. Let me show you some examples because there are some practical examples when you scroll back on the 1 day time frame of the BTC. So let me use trend line. You can use trend line. You can use rectangle too. So let me use trend line on this particular example. So you can see this is a resistance zone because it's above it's above, while the support is below the candlestick. Resistance is above the can because resistance zone is, as the name implies, is resisting the price from going upwards to bringing the price down to let it fall, and support is below the candlestick, like supporting the price to go upward. So in this particular example, you can see what happened here. Let me use this particular place as example. We have that resistance zone there and this support support zone here. Yes, this is just it. From here the price went up, hit our resistance zone. It didn't tap into the support but still went up. It didn't touch the resistance zone, it but came here, tapped into it and got multiple rejections on this resistance zone. And another thing again, for you to make use of once you draw your, before you even draw your trend line or rectangle tool on any chart and say it's a resistance or a support, you must see at least two to three or two and above rejections. So on this particular example now, we have on the support floor we have one, two, three, up to four. Then the resistance one, two, three, four, five rejections on the resistance zone and four on the support. So if, for example, we came to the chart and we saw this and this, then we can confidently take a long after some confirmation though. We can confidently take a long on this support floor and take profit at this resistance, or if you have agreed, you can target the next key level or key zone. But to be conservative enough, you just use here as your take profit. If you long from here, you take, if you long from support, you take your profit at risk, and then you can take a short there after some confirmations. You take your short and use your support at resistance. So I hope you are all following. This is, for example, if the market is in a ranging phase. Yes, and we have downtrending, um, support and resistance, key level identification, like something. Okay, it's not visible enough. And this one, so this is just a rough explanation on support and resistance in a ranging and a trending market. So now, when once you hear market structure, it simply tells you the behavior of the market. And how do you know the behavior of the market? Is simply using highs and lows to identify the current trend in the market. So I hope we are all following. I hope you are still together. For the few explanations I dropped so far, I hope we are following. Okay, let's get straight to the market structure explanation. Since you guys said my voice is audible, so we have two types of market. We have the ranging market, and the trending market. The ranging market is a phase of market where you continue where you continually see. Okay, let me use the part two, not trend line. Sorry, part two. You can also call it a consolidation when market is just printing equal highs, equal lows with no clear direction if it's going up or coming down. This is an example of a ranging market. No clear direction to the upside or to the downside, just equal highs and lows. And that's one beautiful thing about support and resistance. You can use it to trade in a ranging market and a trending market, but most profitable in a trending market because of the risk reward ratio. So let me take off the background. Everything will be white. Yeah, this is it. This is a ranging market. Here to here, here to here, here to here. Equal highs, equal lows. No clear direction. It's not going up, it's not coming down, just consolidating within a particular zone or particular area. So this is an example of a ranging market, and make use of you can make use of it if, for example, you want to like scalp or take advantage of the little moves in that zone. You can short from here, take profit here, long from here, take profit here, then short from here, take profit here, long from here, like that till it continues, and then excuse me, till till it continues and then gets broken, like maybe gets tired and then start coming down, forming um lower highs and lower lows. That is in a bearish scenario now, or or start start going up. Excuse me. It might start going up like this. So whichever one it does, you just get ready and then take action. So this is an example of a ranging market. Let me take this off. Okay. Now for a trending market, let's say the bullish scenario now. You have a series of higher highs and higher lows. Sorry. This is for a bullish scenario. Higher highs and higher lows where we have a break of structure to the upside. Market keeps breaking the previous high, creating new highs and maintaining the lows. Maintaining the lows in the sense that it doesn't come down to take out the lows. That means um, creating new higher highs, new higher low, sorry, a low that's higher than the previous one, a low that is higher than the previous one, and creating breaking former highs, creating new highs. So for a bullish market, we have higher highs and okay, from here, higher high, higher low, higher high, higher low, higher high, higher low, like that in a trendy market, like in a bullish scenario. Market keeps breaking the previous highs and creating new highs. for a bullish scenario, while in a bearish scenario we have series of lower highs and lower lows, where market keeps breaking the previous lows and maintaining the previous highs. That is respecting the previous highs, that is the lower highs, and breaking the previous um, lower low. This thing is messed up. Sorry, let me draw it again. Lower low, lower high, lower low, lower high, lower low. Market keeps breaking the previous lows, and creating a new high that is lower than the previous high. That's why they call it the lower high and lower low, because this low is lower than this low is lower than the previous one above. This one is lower than this, and this one is lower than this, breaking breaking previous sorry breaking previous lower lows and maintaining or expecting um, higher lower highs. So this is just basically market structure in a trend market. So this is it. In a bullish scenario, we have higher high, higher a retest. We call it a pullback from the last previous high. A pullback, because market doesn't don't just go up straight to the upside or straight down. Except maybe it's a meme coin that a rock pull happened, or the devs took profit and used people as a exit liquidity. Even at that, if you check the lower time frame, you will still see some candles forming lower highs, lower highs, lower lows, or higher highs, higher lows. So it's still like it's a culture, it's something that you must see on the chart. So in the bullish scenario, we have higher high, higher low, higher high, higher low, or pullback retest, higher high, pullback, or a retest, then a higher high. And in a bearish scenario, we have lower high, lower low, a pullback, a lower high, lower low, breaking lows, maintaining highs. If this should come up and take out this um, last lower high, then we have changed from a downtrend to an uptrend, but it kept respecting the last lower high, printing new ones and breaking lows to the downside. So that's just basically it about market structure. So before we go into how to you merge it with support and resistance, I hope we are together. So if you can hear me audibly and you are following, you just drop yes, I am following in the comment section, so that I'll get straight to the part where we'll be um, merging the market structure together with the support and resistance, then how to take trade with it and calculate losses, and how to place trade using um, support and resistance and whatever. Okay, okay, all right. So okay, we are very active. Nice, nice. We're active. So let me go back. So let me take this off. For a bullish scenario now, once the market is trending to the upside, from here it got here and came back, you always wait for a retest. Like you always wait for a pullback before you take action. Once you see market going up with green candles, you don't just enter buy long. You don't just enter to buy or long at that because of that instance or example, or like because of that scenario, just enter. No, you always wait for a pullback because after a long push to the upside, market will still pull back to the downside before continuation. So you always wait for a pullback. Market must pull back before continuation. So from this high, now this is how to merge your support and resistance with the market structure if you want to trend. Sorry, if you want to trade using um, the trend market. For example, um, this is for a trending market, like a bullish scenario. You always wait for a retest. Always wait for a retest or like a pullback to the downside. You might not see it exactly like this on the chart, but this is how it normally um, happens. Once a high is being created, there's a pullback. And that is that pullback now that you wait for. Then after some few confirmation, you place your buy order there. Then once market comes and triggers your entry, you take you get tagged in and then make profit when you set a reasonable a level for take profit and it kicks you out with your profit. So you always wait for a pullback. From here we went up, we, we tested and like we pulled back. We tested uh that key level. We went up. Okay. For example now, let me use here. Let me extend this line and explain something now. Let me explain something. Okay. Now, from this scenario now, you can see that this this was a resistance zone before. Now this is a bullish scenario now. Now we are using the market structure together with the support and resistance. So this is a resistance zone. This first line here is a resistance zone. Market from there came down from the resistance zone, but went up, broke that resistance zone, and that resistance zone now has now become a support floor. Market came down, retested it, and went up. So if you want to buy, you since you saw that okay, this resistance zone has been broken, what you do is you now have that information that okay, since the resistance has broken, because once the resistance zone is being broken, it could turn to a support. So we saw this resistance zone being broken. Now we'll now wait here for a buy limit for market to take us from here to the upside. So it came down there, did a retest at that support floor that former resistance that is now a support. From there, it went up and broke this resistance. You can use here if you use here as a resistance zone, you can see that it has been broken. So majorly in a bullish scenario, market tends to break resistance zone and turn it to support floor because we have what we should be looking out for in a bullish scenario like this is for buying. We should be buying in a trending in a bullish scenario. So in a bullish scenario, market tends to um, turn resistance to support. From here, we got a resistance, broke it, we got a new resistance. A market might play a bit around here. can take a shot here, take a shot here, but most of the time though, because we are buying and the market is trending to the upside, this resistance zone tends to get broken over time. From here, it came down, retest this resistance zone now. That is now our support. It came down there, retested, went up, broke this resistance, turned it to a support. Now, from here, it was supposed to come here, then go back. It still broke the resistance. It broke, it broke the support. It turned it to a resistance. Now it came back to our former support and then went up. So you can see something like this. Oh, sorry. You might see something like this on the chart. This is the main reason why you see some persons having 3 to 5 lines or more than on their charts. So this is the main reason. This is the main reason why 3 to 5 lines above or more than. Some persons might just try to like having too many lines, confusing themselves. Okay, let me extend this one. You see, we have this support, resistance, resistance. Um, from there, price came there, pull back to this support, went upwards, broke this resistance, turned it to a support. It came down there, it went up. And now from here that it broke, it turned price came there and got rejected. A new resistance being formed. It came down to this support that was a resistance before. Price came there, pull back, now broke this resistance zone. Broke this resistance zone, turned it to support. Though price got rejected here, it came down instead of it from this place to come here, then pump upwards to the upside. It came down, broke this support, and used this uh, former resistance that for support and use it as support to the upside to a new key level. Now, from this place now, what you want to do is if market should come down to this, if market should come down to this area here, we are looking for a because this now is support. From here we got a push to the upside, broke this resistance. We broke this resistance, turned it to this key level. Now is now a support, and this is now a resistance. If price should come down to this place and push upward, then we are focusing on using this place as our resistance zone. But if it comes back to this place before going upward, then we'll use here as our support floor. But if it comes back to this area and then push upwards, we would place our buy limit here, or you can enter at market price if you see confirmations. Even on the limit order or market order, you wait for confirmations before you enter your buy long. Then for the selling scenario, if you want to look for sales, in a bearish scenario, market tends to like turn support to resistance, whereas in the bullish scenario, market tends to turn resistance to support. Then in a bearish scenario, most of the time market um, breaks support and turns it to resistance. So in this example, we have something like this. This was a support that pushed price there. It came down instead of from here pushing price upward. It got broken. Price came down there and went downwards. You can see something like that happened again. So it's a repetitive something This was a support floor before that pushed price to this side. We are expecting it, like if most people place their buy limit here, anticipating the price to go upwards from there, but it got broken. Now you are trading on key levels. You should always be ready that okay, if this gets broken, then this my support will turn to resistance. Then I'll place my I'll be anticipating to take the price from here to downside. Now you can counter trade. You can counter trade, like for example now, since this place was our support that pushed this price to this side. Now in a bearish scenario, I told you that your support tends to get broken and turn to resistance. So from here, that price broke this support, broke it down like this, like broke this our support, turned it to a resistance. Once, for example, if the price was at this zone, now you know that this key level is now a resistance, so you can place a short from here. Since you have another a key level below that zone, you can place a short here, then take profit here. You can place a short there, then you take profit at the nearest key level below it, and that will be it. So let me extend this a part two. We wait for a retest since this support that put this key zone, that was the support that pushed price to this particular level. It got broken and turned to a resistance zone. So what you do is wait for a pullback. Let price come to this particular area that is now a resistance. You wait for it by um, waiting for price to come to this particular zone after some few confirmation. Like once it gets to this zone, and then you see confirmation with candlestick patterns and what have you, then take you place your sell order. Then once it gets to that zone, it will now continue um, looking for nearest key level to react from. So sorry, let me shift this. Let me delete it and do it again. You wait for a pullback to this resistance zone, place your sell limit after some confirmation, then take profit at the nearest key level or the next key level, so to say. So this will be it. So basically, support and resistance is just key levels. Once you take a short here, you take profit at that particular zone that price got pushed from. You take take profit here. Since you all what you have been doing in this phase of market is looking for shorts. You are looking for shorts. You are selling all through. You don't buy except you want to counter trade, and if you have a solid reason to, and strong confirmations to do so. But in a bearish scenario, all what you should be doing is selling, and in a bullish scenario, all what you should be doing is you should be buying. So um, I have some examples to show. I have some examples, so you can see this was a ranging market from this point, like this, up to this point. That market, let me even extend it. It got broken here. So if you want to trade this ranging market for price got pushed up, forming a bullish scenario. Now for example, we have a resistance zone here. Price came here multiple times, got rejected and got back down. It came here, got pushed up as a support floor that it is, push price to the upside. Now this is a 1 day time frame, because you start your analysis on higher time frame. So personally, I love analysis on the 1 day time frame for clarity of direction, see and where market is going before I do anything. So 1 day time frame, then I'll scale down to lower time frame like 4 hours for my setup, like what I need to see before I take action, and probably use the 4 hours. Then in most cases I use 4 hours for entries, but in fewer cases I use 1 hour as entry. So I only scalp on lower time frame like 30 minutes below when I see um a solid reason to do so. But most of the time I'm a day trader. So higher time frame is my own thing. So this is it. This is on the 1 day time frame. We identified key levels on the 1 day time frame. Now, after seeing this on the 1 day time frame, that okay, for example, if the price was here, was still somewhere around here, okay, you can take a shot. Sorry, you can take a shot from here up to this level. After seeing confirmation, now you scale down to 4 hours time frame. Oh, this doesn't get disappeared. Where is this thing? 4 hours time frame. Uh-huh. This is it. So you can see that the 1 day time frame and the 4 hours time frame are in agreement, are in very much agreement. So before you before you take, if the price was still somewhere around it, like you got to the support and came to this place. Now before you take a sell, place your sell limit. You don't just place sell limit because you see that it has come to your resistance zone, or it's at the resistance zone. You wait for confirmations, and in confirmations you use, I think I wrote something down for that. Yes, for the confirmations you use candlestick pattern. For a bullish reversal pattern, like once the market wants to reverse from downside to the upside, you will see use candlestick confirmation like the hammer, doji, bullish engulfing, is it morning star, other patterns like that. You see it before you take the long. Then for the bearish reversal pattern, we have shooting star or inverted hammer, bearish engulfing, evening star, I think, three black crows, and so many other patterns. Just look out for the one that works best for you and stick to it. So these are the confirmations. Using candlestick, because a candlestick is very important. Whatever strategy you are using, you make use of candlesticks. So before explaining anything further, do we understand what I've been saying so far? From the market structure to the support and resistance, support turning resistance, resistance turning to support, and confirmations. Although I'll still talk more about confirmations with some examples on the chart. So, do we understand, and are we still together? If you understand what we have been saying so far, and we can move on, just type in the comment section that you understand, and we can move on. And if you don't understand, we can just have a recap before we go to the next one. Hello, do we understand what I've been saying so far? From the market structure, support on resistance, resistance on support, and the confirmation, whatever. Okay, okay. Mr. John, thank you very much. Okay, all right, all right. Let's continue. So if I'm to like take a shot on this, for example, if the price was still here and it came to our support before coming back, now I'll be waiting for it at this resistance zone to take a shot, take profit at the support. But before that, I need to see confirmation. And confirmation is not for you to go outside, close your laptop or your phone, go and check for something on Chrome or YouTube or elsewhere entirely. No, it is still on the chart. You look for confirmations. Confirmations are using candlesticks, and candlestick like a hammer, doji, morning star, evening star, three black crows, three whites. Is it three white soldiers? I can't really remember. Inverted hammer, and what have you. So let's say for this example now, let me zoom in. Okay, let me go back to basically I'll use the 4 hours for my entry, but it seems zooming in make the lines to be too far away. So let me just assume I want to uh, use the 1 day as my entry. Let's assume this 1 day time frame is the 4 hours now. I want to use um, as my entry level. So let's assume this is 4 hours now, showing us this chart. So let me arrange it properly. Yeah, very nice. Very nice. So this is it. Excuse me. Um okay, okay, okay. In some cases you might see a candle being formed that has almost equal wicks to the body of the candle. Now, when I say a hammer type of candlestick, I'm talking of a candle that looks like this. A candle that looks like this. Don't mind my drawing. I'm just trying to portray something. Yes, you see something like this. This is uh now you in our confirmations we said bullish reversal pattern. We have the hammer candle hammer. It looks like a typical hammer. So this is it. Now what it means is that from this particular point, um, in a like a bullish candle now opens at the bottom and closes at the top, while a bearish candle opens at the top and closes at the bottom. So let's say this is a green candle, for example. It's okay. For example, let's say this is a red candle. It opened at the top here. It came down all the way to this particular level. Now, it was supposed to close at this level, but price got rejected and start buyers kicked in, pushed sellers away. That's why you're seeing this long wick. Whenever you see a candlestick like this or anything like this, anything this thin line, it means rejection. Um, a sellers being rejected, or for the flip side, buyers being rejected. Whenever you see some this thin line, just simply put that back of mind that it means rejection. So the candlestick, let's say this is a bearish candlestick. Let me see if I can change the color. I pray I can change. Okay, okay. Very nice. So, for example, I said a bearish candle opens at the top, closes at the bottom. A bullish candle opens at the bottom, closes at the top, because a bullish means from down to up, while bearish means up to down. So a bearish candle opens at the top, closes at the bottom. Now, we've if we had something like this, don't mind the line inside. If we had closed like this is a full bearish candle. This is a full bearish candle, indicating a very high selling pressure. That it means maintained control. That means sellers are in massive control of the trend. But instead, it opened here, it came down here, and all of a sudden, it started going upwards. Started going upwards, went upwards, and then closed here. Sorry, it closed here. What does that tell you? What does it tell you? It simply means buyers kicked in from this very point. Buyers kicked in and then uh, almost turned it to a green candle, and then it closes here based on the time frame. If it's a 15 minutes time frame, this one candle tells you uh, on the 15 minutes time frame, each candle you see there tells you that each of the candles means 15 minutes. What has been happening in the 15 minutes time frame? A candlestick is a 15-minute candle. For example, if we are on the 15 minutes time frame, if the candle opens here, it will close on the next 15 minutes. That means whichever candle you see on the 15 minutes time frame, each opens and closes every 15 minutes. On the 30 minutes, same thing. Each candle is the 30 minutes, opens and closes at 30 minutes. 1 hour, the same thing. 2 hours, 3 hours, 4 hours, daily, weekly, monthly. Each candle opens and closes based on that time frame. So we are on the 1 day time frame. If you see something like this is a daily candle. It opened here and closed here. Now a candlestick has parts. This is the high. This is the opening, and it's is the highest point. Or if you have wicks to the up, the top of that wick is the high. But in this scenario, we have no wick, so the opening is the high. It closes there. This is the opening, the high. It closed here. This is the bottom. Sorry, this is the closing. Opening, the high. This is the closing. This is the closing. This is the body, and this is the wick. This is the bottom. We have a candlestick comprises of the low, the high, the opening, and the closing. It opened here. This is the high. Also, it closes here. It closes here, and then this is the low. So that's just it about a candlestick. These are a hammer. Now for the inverted hammer, this when a market is turning from a bearish to a bullish scenario. That is buyers kicking in to the market, taking sellers away. Now for the other side. Now, mind you, it might be any candle, it might be any color of a candle. Yes, it might be a red or blue candle. That is for this example I just showed you. It might be any candle, any color of candle. It's only engulfing candle that it should be a red or green. But a hammer or inverted hammer, it can be any candle for confirmation. Now, once you see something like this, it simply tells you that uh, buyers buyers kicked in, took sellers away. Let me turn it to a green candle. Now, for the parts of a green candle, it opens on the bottom, closes at the top. Okay, let's say it closes here. This is the bottom. This is the lowest point. That is the bottom. But this is the close. The close here because the open at the bottom, close at the top, and this is the highest point of it. The highest point, the lowest point, which is the opening. The opened here, closed here. This is the closing. This is the highest point. Now this is the body of the candle. Now let's say the candle opened here and then started going up. Bias kicked in, and then the candle being formed went up to this point, and all of a sudden it started coming down and closed here. It might close as a green candle, or if it comes down it closes as a red candle. So let's say it got here and closed this at this point. It simply means that buyers kicked in. So once you see something like this on your resistance zone, it's a confirmation that sellers has kicked in the market, took control of the market. Now there's a shift in control from sellers to the buyers. So that just basically these are for the hammer. Then we have uh, engulfing. I think I'll show you that one on the chart without wasting much time. We have the engulfing candle. We have the bullish engulfing candle and the bearish engulfing candle. So this is it. This is an example of a bearish engulfing candle. That means um, a red candle engulfing a previous, let's say, the previous candle, which is a green candle. It simply means that the red candle taking 50%, like it's higher than it comes lower than the previous candle, which took above 50% of the um, like the previous candle is at or lower than the 50% of like the middle of the candle. Like this green candle is at the middle of the green candle or lower than the middle of the candle. Like for example, this red candle, the 50% of it is the middle of the candle. So if the previous one before it is at the 50% or um, the middle or below, that means the candle has engulfed it. If it comes below it, in a simpler sense, if it comes below it, it has engulfed it. Engulfing means um, um, overtaking something, or like taking charge, or like taking control of something. So this is an example of a bearish engulfing a candle. Now this is an example of a bullish engulfing candle. This green candle is this red candle is lower than this green candle. Like it went up and engulfed bearish candle. So if I'm to take if I'm to take a trade, if I'm to take a shot on this particular level, I will place a sell order because I've seen this bearish engulfing candle. It might not be the candle before, it might be a candle or two candles before it. It's still a bearish engulfing candle. So once you see that, you can then place, maybe markets at this place, then you can place your sell order here, something like this. You place your at the resistance zone there, or a bit below it. You place your short there, take profit at the resistance zone. Sorry, take profit since you are selling You take profit at the support. Set your um set your stop loss above resistance. If you are buying, set your stop loss below support, not too far away but not too close, because sometimes you can see in this scenario market came down there, played around before going up to it. So you can see, if you took a short here, take profit here, you'll be kicked out with profit. Same also to this particular level. You can see this example here. You can see this rejection here. It's also an rejections is also an example of a confirmation, bearish engulfing, dodgy, hammer, and what have you. So if you take, if you see this confirmation, take a long from there. Let's say you take a long from here at this support, then you take your profit. Sorry, you take profit at the resistance there. Your order will be filled. Take profit field and you set your stop loss with them. So that just basically um, how to enter long and short on. Let me say you set your stop loss here. So let me use this as example. For example, if I, for example, this hasn't triggered, I want to set it on my Bybit. Calculate stop loss percentage to take it on my Bybit exchange. So what you do is to take the trade, you check on this your long position to, there's a little number on the long position to, you can see a digit there, 5.15 percentage. The one in percentage is the one you work with. Yes, the one in percentage is the one you work with. So quickly, I want someone to help us with a calculation. Now, for example, I have a $9 account. So I deposited $9 to my Bybit for this example. So quickly, I want, for example, okay, for that $9 account now, what I should be risking per trade is 0.45 per trade, which is 5% of my capital. Because if you are starting out, most especially, you have to risk 2 to 5% of your capital. Yes, and not using more than 10x leverage. If you're just starting out, 2 to 5% of your capital. So me personally, I want to risk 5% of my capital, which is $9. So 5% of $9 is 0.45 per trade. So for this example, I want one of us to calculate um, this stop loss percentage for us to get our order value that will place on Bybit. So basically, this is it. You divide whatever amount you want to risk on a trade by that stop loss percentage on your long or short position too. And in this scenario, we are taking a long, and our stop loss percentage is 5.15 percentage. So you divide, I'm risking 0.45, so I will divide 0.45 divided by 5.15 uh, percentage. So quickly, someone can just help us to calculate it for us. 0.45 divided by 5.15 percentage. Quickly, please. I would have done it, but my calculator doesn't have, it keeps messing around, doesn't have the percentage symbol that I'll just place on, type and have my answer straight. It always require me to do a manual calculation. And again, if you don't have a Bybit account, um, the link is in the groups. You can just sign up and have an account, um, so you can be following us with whatever we are doing, so that you have, like, you'll be following up and you'll be catching whatever we are doing. You might follow up with other exchanges, but if you want, for example, if someone that just starting out, I would recommend Bybit because it's user friendly and it has easy features on the interface. So you can just click on the link to the group, have an account, sign up, and if you deposit, let's say $100, and you trade with some volume of trading volume. I believe there are some rewards there. Yes. So click on the links in the group, sign up, have a Bybit account, and then you can follow us with whatever we are doing on this live class or on the subsequent live class. So quickly, someone just calculated for us. 0.45, then you divide by 5.15 percentage quickly, um, so we can continue. I've stayed too long on this live class. There's a don't worry, there will be a recorded version of this live class that you can come back to watch. That is not a problem. Okay, I'll just do it myself. I think I have my phone beside me. So 0.45 divide by 5.25 percentage, it gives me 8.73. So I'll just pick um the number before the decimal point, which is 8. So 8.73, but you pick the one before the decimal point, which is 8. So I'll go to my Bybit. Okay, it's on BTC USD. So make sure it's on isolated limit. This price is for your entry on the signal or on your setup. Our entry is um 57.032.8, stop loss is 54, take profit is 72. This is just for example. This is on the daily time frame, that's why the take profit is far from the entry, but it will not be the same for 4 hours and 30 minutes or 1 hour. So this is just for example. Your take profit should not be too high, far away from your entry. This is just example. I just want to show you how to enter trade and calculate your losses using the stop loss percentage. So we divided 0.45 by 5.15 percentage, which is our stop loss percentage, and we got 8.73. But we are working with 8 because we are working with the number before the decimal point. So you go to your Bybit, sorry, then the value, you type it there, 8. Then the entry, our entry is 57.57032.8. Sorry, 57032.8. Now this is for the entry. So 7032.8. Now you activate your take profit and SL. That is your take profit and SL box. Your take profit is type there in this account. Why it's in your you